Good morning, everyone. I hope you had a great evening last night. It was pretty cold here in Wichita. We had a pretty stout wind out of the northeast, so this big storm that has blown through our area at first, we're getting the backside of it right now. It's pulling cold air down from Reg. Reg is sharing his air with us. The Canadians do have a way of making a point, especially during the winter. When you need them in the summer, they're pretty quiet. So we got several things going through the market right now. The focus is what deal will Greece get from the European Union. There's a 2-week extension on the table. Greece has asked for a 6-month extension. Germany's head of BUBA, the German Central Bank, Wiedmann speaks at 11:30 Eastern today. That could add, so that's the time we need to be watching the markets, 11:30. Tomorrow is option expiry for our treasuries, 10-year note and the 30-year bond. And next week, Yellen goes before Congress. And given the attention paid yesterday's FOMC minutes, Janet Yellen will be quizzed about when possibly will the Fed be raising interest rates. And again, the Fed's in a just really a tough place. Imagine you're trying to run the Fed, and every day the EPA, OSHA, some other agency comes out and increases the regulatory burden on business, or actually makes businesses shut down, like the coal industry, like foundry business, foundry industries, all the rest of the stuff. And then you have taxes being raised by Congress, the wrong kind of taxes, capital gains, etc. So the Fed, I do not envy their job under these situations. I think they're being tasked with mission impossible. What I want to show you right here is this little bit of volume budge. And when you study something and you want to work with something, you really want the theory to hold across all time periods, all markets. Everything needs to be the same. So right here we had this breakout yesterday afternoon, and you can see that there was volume at 25.5, 26. And the market was pulled right down to this volume. It did bounce off of that volume, and we're right back in there now. So it's my contention that volume attracts, and you can see that it does. And the first time you hit it, it does act as support resistance. About 25% of the time, it's immediately rejected. Most of the time, we spend time here. So just mark this down. It is significant. We see this all the time in all markets. Now, what we have right here is the breakout from 18.5 all the way up to 28.5. That's 10 points. So cut that in two. That takes us to 23.5. That's 50% retracement. So far, we've stopped at 24. You can see that this volume area right here from 22 to 26.5 is where the market is traded right now. So we don't have a lot of news today. We've got jobless claims, 290. That's pretty much the default figure. I don't think we pay a lot of attention to it. Fed at 8.2. That one probably will get a little bit more than its normal impact on the market or attention. LEI, no one pays any attention to it because of the interest rate component at plus 0.3. And then at 11:30 Eastern, Wiedmann speaks, BUBA speaks. Don't you love that name? That should be the name of the Atlanta Fed, right? But I don't think we'd have a lot getting that through. Just kidding for all of our Atlanta folks down there. Hey, my name's Red. I came from Tennessee. From the hills of Tennessee. That's even worse if you'd ask my wife. The uneducated part of the state. So anyway, option expiration to me is going to hold us a range. So 21.25 by 1, 17 to 13 by 2. With that idea in mind, we've got volume at 02. We've got that, so 31 to 03 is sell 1. And 7 to 11 sell 2. Option expiration favors a close at 27.16. That's the math. Okay, the knob spread is pretty much where it was last night at 16 plus 26. It's come in a bunch. Remember, we peaked at 21.5 or 20.5. I forget. We've come off 4 to 5 handles at. It's a big trade. Okay, looking at the 30-year right here, get a little deeper, so 13, 9 to 13 by 1. And 1 to 5 is by 2. The mathematical expiration for the 30-year is 144.16. On the sell side, 23.27, picking up this volume right here. There's not a lot of magic, just leaning against it from 31 to 03. Okay, gold got a boost from India last night. Indians can now use gold as collateral for loans. Didn't explode the market to the upside, but it is supportive. Central bank selling is where we are right now, and I don't think that's going to change. That allows them to buy it on the cheap. So we've got volume right here in the 22 area, and then we've got volume up here in the 29 area. So this 22, 25, sell 1. 28 to 30, sell 2. On the buy side, we have our break here from 13, so we'll make 14, 16 buy 1, lean against that high, and then back to our 10 plus or minus for buy 2. And with all the stuff that's going on out there, it's just really, 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 really hard to dump any gold that you own personally. And you see central banks, you know, one of the ironies of what's going on with all the central banks printing and all of them on the same page with zero interest rates is that maybe gold will drift back in as the only real asset that a bank can hold to keep their depositors with them. I'm not saying that's going to happen, but that would be one of the ironies of all this. The central banks will have accomplished exactly what they didn't want to accomplish. Funny how it works, the law of unintended consequences. Okay, as you know, we like the sell side of the market. We have circled 111.50, 115.50 as structural sells, and we got to 114.50 plus last night. The high was set in London and was retested in P period, and we've come off quite a bit. Looking at the fundamentals, and this market will trade fundamentals, nothing that the EU does with Greece or doesn't do with Greece will change the long-term direction of the euro. But we've been in a trading range right here that's held up pretty good. So we've had buyers below 13.50 and we've had sellers into 14.50, and that's kind of where we are right now. So 50 to 60 is buy 1, and 20 to 30 will be buy 2. On the sell side, 90 to 114 even is sell 1, and then 20 to 30 is sell 2. Two weeks right now is where Germany and Greece are and working out a deal. Greece naturally wants 6 months, so I can pick up the mic again and make a couple of visits to China. Russia is setting up their own SWIFT system. China will probably back that to some extent to get them going. So Russia and China continue to chip away at the central banking of the West at G20 because of the sanctions being imposed by the West on Russia for their really outright invasion of the Ukraine, albeit was heavily encouraged by the United States. Again, you just cannot, you could not ask for the decision making out of our State Department, out of our foreign policies. I mean, everything they touch just turns to crap, and almost instantly, and it's probably not going to change. Okay, crude oil, the API built quite a bit. We have the largest storage above ground in the United States as people are pumping oil, selling it to anybody and anybody at any price to get some cash flow to keep the current operations going. So we're right down here at 50. 50 is one of those numbers that can bring in the opposite activity. So buy one at 50 to 50 and a quarter, and buy two at 49.50 to 75. On the sell side, 51, 51 and a quarter. And the bill today in crude, they're looking for minus 1.8. That doesn't seem likely, in my opinion, and they're looking for a draw of 110 billion BCF in natural gas. I think the long-term direction of crude is lower just because there's more supply than there is demand. And I don't see economic growth returning instantly to the Western world. Everybody hopes that the United States can hold the rest of the world up now, China too. Germany, 1 month is going to be part of that group, 1 month they're not. So Germany, the United States, and China are still what everybody points to hold the market up. The world's economy going. Okay, Yellen speaks next week to Congress. We have focus of the equity markets is what kind of a deal will Greece be able to cut with the EU. The markets are on hold till that deal is done, and it could be as long as 2 weeks. So what they've accomplished is they're going to hold the market in a trading range, and this market's going to close above 2,100, and I don't know what piece of news it's going to take to get it there. But again, the easiest trade to see is failure to take out this 2,100. So selling failure to take out 98, 2,100, and then 46 is where we are. On the buy side, 85, 87 is pretty damn good support. So we'll leave 86, 88. Buy one, and 80, 82 for buy two. The Philly Fed number could come in lower than forecast. Just claims could come in higher than forecast. The Empire Index messed this week. They're not tied at the hip, but they usually do trade pretty close to report similar numbers, and LAI at plus 0.3. So number one, number two, and nobody paying any attention to LAI, and then Weidman from Bubba speaks at 11:30 Eastern time, so we need to be careful around that time of the day. Chuck, I have no idea. I don't even know what, yeah, it would be disconcerting. Get with Peter or Chris and see if you can get it taken care of. Or do a force tick rebuild or shut the software down and then reopen it. When force tick rebuild doesn't work, go to reopen the software. I see a quiet range day in the E-mini, probably 7, 8 handles. But we're going to move big. If we don't move big in the first hour, it'll come late in the day. It'll take at least 20 minutes to get everything up and posted. I'm going to get busy on that. Be back with you as soon as possible.